Hello. Welcome back, friends, to Alpha Beta Soup, where we unpack Bitcoin using on-chain analysis. I'm TXMC. Well, we got a great rally yesterday. I'd love to talk about it with you guys today. We'll break it all down. I'll also give you a sense of what I'm looking at structure-wise. Prices that I think might be important in the coming rally, if we do get a rally, and some other factors I'm looking at that might contribute to weakness. We'll look at the derivative space, we'll look at the Bitcoin price chart, of course, and we'll also bring in some on-chain. We'll look at short-term holder spending predominantly. You're watching the best on-chain and Bitcoin analysis channel on YouTube. If you enjoy this content, make sure to give my video a thumbs up and subscribe. I greatly appreciate all of your support. Now, one housekeeping item before we get started. I wanted to put this at the beginning of the video so I catch the most people with it. I have been told by a couple of my viewers recently of emails they're receiving from someone claiming to be me. You may see an email that looks like one of these. It looks like it's coming from Alpha Beta Soup with TXMC. And if you respond to this person, they may even write you back. But please understand, this is not me. This is a scammer. I do not have your email address. I have no way to email you. I don't have any way to contact you directly other than Twitter if I know you. And I tend not to send DMs to people. I definitely don't send emails. This is absolutely a scam. I do not have a private group. I don't have a Discord. I don't have a membership. I don't ask people about their portfolios or talk to them about their money. The only places that you'll find official content from me are the videos that I put out on this channel and posts I make on my Twitter page about my content. So if you receive an email from anything claiming to be me, please report it. Feel free to let me know about it in case maybe it looks different. Maybe the scam starts to take on a different form. But I just wanted to point this out to you guys. Please take care of yourselves. Do not let yourself get ripped off by one of these scammers. They're trying to take advantage of the quality content we're putting out in this community, and I won't stand for it. So protect yourself. And with all that said, let's get into the real reason you're here, which is Bitcoin. Well, yesterday was a fat green candle, 11.5%. And if we go back through history, the last time we had a candle bigger than that was on February 8th of 2021, just under a full year ago. And that day it was a 19.5% green candle. Many of you may recall this as the Elon candle. This was the day when we found out that Tesla had Bitcoin on its balance sheet due to an SEC filing. And there was a lot of excitement during this period of the market right here. We also know that this was near the end of the height of on-chain activity, as we've explored in the past. So there's a curious confluence between the price action and the on-chain right here. So it's great to see a big green day, but we know we've got a lot of work ahead of us. If I put back on my 3-day chart here, which is my preferred time frame for looking at long-term aspects of Bitcoin, we can see we did break a descending resistance here. I'm not a huge trend line drawer, but it can be good for the eyes to see when a trend is broken. And we have broken that trend right here. Now, what does that mean? Does that mean that we're out of the woods? Well, not exactly. Here is that same 3-day chart, but I've got a bunch of my horizontal levels drawn out that I think will be important when price gets to those areas again. Down here at the bottom, we've got the CME gap, which we talked about on this channel when it was last in play. We saw that filled in. And then February has opened really strong. And we're now testing the middle of the range here, where there's a lot of horizontal resistance that comes into play. And right now, the area that I'm looking at the most is this price right here. It's 40,700. And that has been basically a structural line in the sand for this market for the entire year. If you look in the summer, on the retrace rally, it stalled out at this level. It also marked the bottom in the middle of September before the rally into October, and it has been a player in the recent price action, as it's also very close to 40,000, which is a big psychological level. So right now I'm looking for a close, a 3-day close above this level of 40,700, which would give me confidence that maybe we can actually rally up out of this range a bit. But even then, there will still be some factors to keep in mind before we get too excited. And they relate to the retrace levels from whatever shape this rally takes. Now, if I throw a fib on here, the areas that I'm most interested in seeing break. Now, we're far away from these prices, but when we get up to these areas right here, this will be the critical moment that will decide if this rally can actually sustain itself or not. Now you may be saying, TXMC, that's a long way from where we are right now. You're pointing at prices up around 55,000, 58,000, and we just broke back over 40. That's true, but I'm not interested in short-term price action. We talk about it on this channel because it's interesting and I like to keep abreast of what the market is doing, but I'm interested in a long-term perspective of Bitcoin. And long-term, this rally could still stall out right here and make new lows. Now, why do I say that? It's mostly because of this retrace level right here, the 702, which is right around 58,270. Now, I'm not the first person to notice this. This Fibonacci level is used by some very good technical analysts. Blockchain Backer is one of them. I'll leave a link to his channel in the description if you'd like to go see someone else using these tools. But this level right here is historically a line in the sand for retracement rallies. Let me show you what I mean. So here we're looking at the BLX, which is the Brave New Coin Liquid Index for Bitcoin, and it's a daily chart of its entire history. It's only a daily chart, so you can't use the BLX for intraday, but it's very reliable for historical price. And if I show you some of the rallies back in history, there's a lot of times that I can point out where we put in a top, there was a pullback, and then a retrace rally. And the retrace rally often stalls out at the 702 retracement. And often when that happens, when the 702 provides resistance, what ultimately occurs is price makes its way down and creates a new low, takes out the previous low and continues to decline. Now the time frame doesn't matter as much as the levels. And you can see right here, the 702 provided resistance. This is back in 2014. Moving forward in time here, now we're in 2016. In the middle of the bear market that started the real parabola up to 20K, right? And even in smaller scales, the Fibonacci levels still come into play. There's a rally up, you set a top, there's a pullback, and then you have a retrace. And where does the steam run out? At the 702 retracement. I can keep going up the ladder here. This just keeps happening. Here we are, midway in the bull market in 2017. You zoom in on my chart so you can see this better, and I can place my fibs a little more accurately. There we go. Look what we have. We have a run up, we have a top, we have a pullback, and then we have a retrace. And where does it run out of steam? 702. Now, you could zoom this in even more here, and you could say that maybe price actually ran out of steam at the 786. That's valid as well. But what I'm looking at here are these candle closes that barely make it over the 702 level before the failure. And what ends up happening? It makes a new low. Now let's go up to the peak. This is the absolute peak of 2017. This was the parabola top that is so famous in Bitcoin's history. Zoom in on it here. What happens? We get a top, we have a pullback, we have a retracement rally. Where does it run out of steam? The 702. And then what happens? It makes a new low. Here we are in 2019. This was the rally out of the depths of the 2018 bottom when we saw prices down near 3K again. And then we had this rally, this mid-2019 rally that was spurred in part by the plus token Ponzi. What ends up happening at the very top of this rally? Here I am zooming in. We get a run up, there's a top, the first pullback, and then a retracement rally. And look where it runs out of steam, the 702. There is a wick over the 786, but the candle closures come back down to the 702, and then it sets a new low and continues to decline. It is rejected by the 702 fib level every single time. Now, here we are in 2021. Here's the beginning of 2021. This is January and the first run up to 40,000 and then the pullback. As we've talked about on this channel before, this pullback right here was the height of market activity for 2021. This area right here that I have my fib on. And what happened? We had an immense rally up to a top at 42,000. We then had a pullback and we had a retrace rally. And where did it run out of steam? You guessed it, right above the 702. Now it did come up and touch the 786 retracement, but these are only $1,000 difference. I'm not that concerned about this. The accuracy of the fib is still very much relevant. And what happened? It came back down and it set a new low. Now, granted, we did continue the bull run, but that's not necessarily a failure of the fib. That's more of an indication of the kind of market that we had. But what did occur was that this rally was rejected. It declined again and it set a new low. It set a new low from the bottom of the fib. Now, we did get this Elon candle right here, which, if you'll notice, shot us up above the 702 and the 786 back into rally territory. So in a sense, that is what catalyzed a break of the normal pattern of seeing the 702 hit. We had an outside factor, an external catalyst that drove adoption and broke the pattern. But we still set a new low before that happened. And then here at the market top in April, at the absolute peak, what happens? We finally run up and we reach a top. We have a pullback and then there's a retrace. Where does it run out of steam? Everyone say it with me. So I think you're getting the point now. This happens a lot. You can see that it's happened consistently at market tops and peaks in mid rallies going back all the way to 2014. And I could point this out on virtually any asset that we look at, because the math of Fibonacci is the math of nature, and markets are the outcome of human behaviors. And what are we but just another animal on this planet? And when you get a bunch of us together behaving as a group, there tend to be similar proportions to our activity, and those are represented in the math of Fibonacci. So with all of that explained, let's throw a fib on our current rally here and see where the 702 is. Here it is. It's right around 58,300. Give or take a few dollars depending on the exchange you look at. Now, because of this level here and because of everything I just showed you, my current base case is that this rally still could get swatted down and find new lows until we actually come up, test this level, and move away from it. And the reason I have this perspective is because I am not a day trader of Bitcoin. I don't really care about the intraday price. I care about the greater market structure, and that's the approach that I take to my analysis. And after I showed you all of the times in history where the 702 ends up being a rejection and we create a new low, there is still a chance that Bitcoin moves its way up here and then gets swatted all the way back down and creates a new low. That could happen. And that's what I've been watching for. That's why I've continued to preach caution. Because what's going to happen if price starts moving its way up here, if we get back up to 50,000, which is right here, if we break over 50,000, there's going to be euphoria. Market sentiment is going to shift dramatically. It's probably going to start happening when we get back over 45. If we clear this liquidation wick right here, we clear this range, and we start creeping up towards 50, market sentiment is going to change dramatically. It's going to become very bullish. You're going to see Twitter and all social media become extremely excited. People are going to start talking about 100K prices again, new all-time highs. All of that narrative will start getting pumped into the community once we start getting back up to these levels. And when we get to the 702, it could be at a fever pitch. Everyone could be extremely excited. I mean, just think of the amount of pain that we endured here, right? We're talking about multiple months of downward price action, extreme fear in the market, and just a lot of uncertainty in the macro picture, as we've talked about on this channel at length. So just keep your eyes open for what happens over the next few weeks. This could happen slowly. Price could creep up quickly. I don't know what's going to exactly play out fractal-wise. But what I can tell you is that this level is extremely important. And until we actually test it and come back down, there is a very strong likelihood that this could run out of steam here, unless we get some kind of external catalyst, like we got back here, or the macro picture starts to look a little bit less like a shit show. So coming back to my chart with my horizontal levels, just to wrap up this section of price action, what I'm currently hoping to see is a 3-day close above around 40,700. That has been a middle line in the sand at a few points during this year, and I'd like to see a close back over this level before we start talking about a rally taking off. And then, as I mentioned, once we get back over the 618 retracement level, which is just below the 702, all eyes will be on this level right here. But we have to get there first. And as you can see, there's a lot of important resistance before we get there. So I don't want to get too ahead of ourselves. I'm just trying to lay a groundwork for you as to what I'm looking at in the structure of the market. Now, from a derivatives perspective, there hasn't been a ton of signal coming out of the futures market using the traditional tools that we use on this channel, open interest and the funding rate. What we have seen in the last few weeks, with price kind of creeping out of these lows and now seeing this rally, is that open interest has not been wiped or grown in any notable amount since then. We're kind of still hovering around in the same general size of the market. But what I am seeing is an increase in CVD volume for spot and for stablecoin margin futures. So let me explain these briefly. CVD means cumulative volume delta. And basically, it's comparing all the buy volume and all the sell volume and showing you the difference between them over time, aggregated. This line here is for the spot markets. And if I show you the settings, it's a bunch of them. Binance, Bitfinex, Bitstamp, Coinbase, Gemini, Kraken, they're all included in here. This line at the bottom is the same thing, CVD, cumulative volume delta, for stablecoin margin contracts. Now, those are futures contracts margined with stablecoins. As we've talked about on this channel, stablecoin margin open interest is the majority of open interest right now. So that's why I'm paying attention to this view of it. The other side of the futures market, the other side of the margin, are people who margin with Bitcoin itself. And that has actually been reducing and taking less and less market share over recent months. The majority of open interest is margined with stablecoins. So what we're seeing is a rise in the cumulative volume in both stablecoin futures and in the spot markets. That means we're seeing more buying volume than selling volume. And this has been occurring since around here in the price action, basically since we hit this wick low back here at the end of January, where we filled in the CME gap. That's about the point where we started to see the cumulative volume shifting more towards the buy side. So that's positive. If I'm going to pull a positive out of futures where I see a diminished amount of signal, this would be it. Additionally, when I go over to trading light, now this is a different view of the same exact futures market that we're looking at right here. This is the Binance Bitcoin future margined with stablecoin, with Tether. This is the same thing over here, Binance Futures, BTC, USDT, right? And you can see here is the cumulative volume delta. Here's that metric I was just talking about, how it's come down, it's bottomed, and now we see it rising. We see buying volume outweighing sell volume basically since these lows at the end of January. And the other reason I wanted to show you this, I don't use this for trading, but I find this tool very fascinating. And this metric right here, I'm going to enlarge this, you can see it better. This red and blue bar chart is the volume delta, whereas the one on the bottom is cumulative. It's the aggregate across the time series. This is window to window. Right now it's on an 8-hour chart. And when you see blue bars and the white oscillator back above the median, it's showing you that buy volume is outweighing sell volume for this instrument right here, this Binance future. If you look back in October, this was the end of September and the beginning of October when we got the rally that sent us to new all-time highs. And look at the burst of buying volume here on the volume delta. You see that? You see that big burst of blue and how this white oscillating line pops back up here. And that kind of helps to catalyze the rally. But then once we get up near the all-time highs, this flips negative again and it stays negative. And in a sense, this was a warning sign that momentum was running out of steam. But if we move forward in time, look at this buying volume right here in recent days compared to the last several months. If you go back all the way, you'd have to go back to the beginning of October right here to find a buying delta that's anything similar to what we're seeing right now. This also came on an uptick in the cumulative volume delta, which we're seeing here, before it then began declining into the all-time high. But right now, there's a strong buying volume on this Binance future, which itself makes up a considerable portion of the current Bitcoin futures market. So I think that this is a positive. It looks like momentum is shifting here, but we still need to see this back test of the 40,600 level, really 40,000 in general, before we can say that we've found it as support. But right now, it does look constructive on the derivative side. And just to show you why I'm paying so much attention to the Binance stablecoin future, it's because right here, represented in this light blue line, is the amount of open interest assigned to that specific instrument compared to the entirety of the Bitcoin futures market. Every exchange that offers a Bitcoin future offers some type of margin or both. Some exchanges offer both Bitcoin margin and stablecoin margin, like Binance. Some other ones, like Bitfinex, may only have one or the other. And Binance's stablecoin-backed Bitcoin future makes up 23% of the entire Bitcoin futures market all by itself. It's this line way up here above everything else, above CME, above FTX, above all others. So that's why I pay close attention to the volume coming into that instrument. So I do want to touch on the on-chain space today. There hasn't been a lot going on in that realm of the world for Bitcoin, but when I do see changes or ripples in the water, I like to point them out. And on this rally in the last 2 days or so, we've seen the spending of short-term holders bounce back up close to break even, which is really interesting because this group as a whole is still very much in loss. But many of those holders in loss were not spending their coins in the last couple of days. Here is a different chart of the same look of short-term holder spending. So over here on this chart, my short-term holder spent profit ratio, this purple line right here, is represented in the middle of the chart right here. This is short-term holder SOPR, you see right there. And look, right over here, look at this print back above a positive value. Zoom in a little bit more to make that more visible for you. See right here, short-term holders actually spent back into profit recently. However, as a group, they're still holding very much in loss. This bottom line is their current standing P&L. And you can see they have been declining further and further into loss, into this pullback. But just in the last day or so, the spending out of this group, meaning the individuals who actually took the time to spend their coins in this rally, were spending it from a level of profit, which meant that they acquired them down here at the lows from January. But it hasn't been enough to get their group in the aggregate back towards the positive. So what that means to me is that there are still a good number of short-term holders sitting underwater who are not spending their coins into this rally, but they may provide sell pressure as we rally back up towards their cost basis, which is now at 47,500. Now, the last time we talked about the short-term holder cost basis, it was at the beginning of December, and it was right here when price was looking to test it as support, as we saw back in September and August when we had the short-term holder cost basis provide a type of psychological support for price action. It's where the newest investors of Bitcoin are able to keep themselves in a state of profit. And whenever they get back to break even, they see it as an opportunity to buy rather than spend. It's a sentiment shift. And once this group got underwater, back here, their cost basis was around 53,500. It's now declined to 47,500. But once we got under this, we've not been able to fight back over it, which is a similar behavior to what we had back in May, June, and July of last year. This group gets underwater and they try to spend themselves back into levels of profit, but the market just isn't ready yet. Every time this group gets back up towards its cost basis, sell pressure is initialized and price comes back down. But then once we get into a bull market, you can find this level provides itself as a pretty consistent support. Sometimes it kind of wicks below it and then catches itself again. So it's interesting to see that they've spent themselves back into someone taking some green from these lows here around 35,000. But short-term holders still have a lot of work to do. And I do think that a fair number of this group, being that they are paper-handed newer investors, people who are statistically more likely to spend, there's a decent chance they provide sell pressure as we get back up towards the middle 40s. Just something to keep in mind. And just in terms of identifying value for Bitcoin, I think it's undeniable that we have been in a value zone. This metric here is something I call the cost basis ribbon. And it's a way of identifying value zones for Bitcoin based on whether or not the cost basis of holders is declining. Now, when you see prints on this chart in pink, it's showing you that both the short-term holders and the long-term holders are seeing their cost bases decline. Now, short-term holders, their cost basis is very closely tethered to the price. So when price declines over a 30-day period, the short-term holder cost basis often declines as well. But the long-term holder cost basis is tethered to price action from 5 or 6 months ago. And it takes time for those coins to graduate into the long-term holder group. And when they do, that is when they affect the cost basis of the rest of the group. If you look back through history, moments where this ribbon has printed in pink, meaning that both groups are seeing their cost basis fall, are very rare. And they're usually in the absolute depths of bear markets. Now, if you look at the Mt. Gox bear market in 2015, it happened a lot. This was an absolutely brutal, 3-year-long bear market. I don't necessarily think that we're in store for a 3-year-long bear market. If you look at other points where this has happened, it's been more contained to about a month or two at the most. It happened here in 2018 during the capitulation. It happened in March of 2020 during the C19 crash. And we're currently in the middle of about a 40 or 50 day long print of this ribbon. So if you were trying to identify value zones for Bitcoin for your long-term play, for your cold storage, this chart is showing you that we have been in a value zone since about Christmas Day. And this chart is based on the long-term holders and the short-term holders both seeing their cost bases decline. Like I said, if we look at the short-term holder cost basis, you can see it is declining on a 30-day basis. This is what powers the cost basis ribbon. This is one part of it. The short-term holder cost basis is still declining. And now here the long-term holder cost basis is actually curling back up. And it might actually break back to the positive here shortly, which would then cease to print a value on this ribbon. So this is just a cool chart I wanted to show you guys. It's a way to kind of identify value zones and also keep in perspective where we are, because every time we've had these prints, Bitcoin is then just turned around and rallied back out of it. So it's a matter of staying patient. If you can weather this current price action, you will come out the other side stronger. So let's bring everything together that we talked about today. As we discussed, we're kind of in a value zone for Bitcoin right here. This ribbon will stop printing soon, but it still means that we're in a very good place for price historically. And also, if you look at all the times this ribbon printed, it printed at the absolute worst points in the market, and everything after that tended to be pretty good. So just continue to be patient if you're in a position where you're not overexposed. Short-term holders are still very much in loss, but just in the last day or two, a few of them have been able to exit with some profit for the first time in several weeks, which is a positive sign. But there are still many short-term holders in loss right now, and they may provide sell pressure as we move back up closer to their cost basis, around 47,500 right now. Additionally, we are seeing some positive momentum in the futures market. We're seeing buying volumes step in, but we haven't yet seen a real liquidation event that cleansed the market of the buildup of open interest. So right now, the signal coming out of futures is muddled and difficult to get a clear read on. So right now, we're simply observing. And on our price chart, we have finally seen a bounce back over 40K, but we're looking for a 3-day close around 40,700, or really 40,000 in general, to confirm that we might actually be able to rally out of this range. And as we explored on this channel in detail, the level that will become key to watch on the retrace is right around 58,300. It's the 702 Fibonacci, which has provided a key reversal point for rallies in the past. And when price gets rejected from this rally, it almost certainly comes down and makes a new low. There is still a chance that this becomes a fake out and price continues to drag downward into our original base case of testing the range lows before price discovery. That still remains a very possible scenario in my mind. And for me right now, shooting back up to this level is not yet in play until I see my 3-day chart close above this key level. So that's what I'm looking at right now. This is the kind of market that really tests your conviction. And if we continue to see strong price action, as we have in the last couple of days, if we actually get back up into the middle high 40s, pay attention to short-term holder spending. But more importantly, pay attention to market sentiment. As we discussed on this video, when price gets back over 50,000 up into the middle 50s, it's likely to bring with it a massive wave of bullish sentiment, of euphoria, of excitement. And that is where the market can provide a trap for the bulls. It's not until we break over those key Fibonacci levels that I'll start to feel a little more comfortable that perhaps we might actually test the top of the range. That doesn't necessarily mean we'll see all-time highs, but it does mean that we'll have to adjust our expectations a little bit. Because right now, my base case is still that we test the low 30s again before any new all-time high. And that will continue to be my general framework unless the market starts showing us a profile of sustained demand, which would then tell us that we're in a proper bull market. But we're not there right now. Make sure you're following me on Twitter at TXMCTrades. This is where I post all of my content that is not on YouTube. I do not send emails. I do not have a private group. I will never reach out to you on my own and ask you about your portfolio. This is where you can follow me, here on this YouTube channel, on Alpha Beta Soup, and right here on my Twitter page. That's it. Beware of scammers. They are out there, and I can do very little to control them. So you've got to protect yourself. If you're ever unsure, you can always DM me, and I'd be happy to answer you. I try to answer as many of my DMs as I can. We'll give the market a couple of days to play out, and maybe we'll do a live stream next week before I begin some traveling. I will be traveling about a week from now, but we'll talk about that more when the time comes. I hope you're having a great Saturday. Try to enjoy your weekend. We get so caught up in looking at the markets that it can be easy to just lose days at a time staring at the charts. It's important to be able to step away and go enjoy yourself for a day or two at a time. But all right, I've been talking nonstop. I'm gonna let you go. We'll produce another video in a few days, and before that, we'll probably do a live stream, maybe on Monday. If you'd be interested in that, or if you have other feedback or questions, please leave them in the comments. I read through all of them. Thank you so much for your support. We'll talk again in a few days. Take care of yourselves, friends. Cheers.